Well, if you catch the closing print on Stock Trader Network, we talk about the mark, that closing print, where billions and trillions of dollars are marked on people's P&L at 4 o'clock. The SPY closes. Oh, everything closes, and it's marked. Margin clerks do their job. Brokers do their job. But sometimes, in a matter of minutes, the mark is gone. ZT, zero DTEs that were out of the money are now gold. A Trump Truth can do that, folks. We're 44 handles from the mark. You shorted the mark yesterday, you're deeply underwater. That's what can happen in this market with news. So we'll cover all the details of that. We'll talk to Triple D. We'll see how he handled it. Of course, we'll talk about the extended ceasefire. Adobe trying to buy some cheap stock. Meta's tracking you. T-Mobile merger with who? When? Why? Ratings, earnings, new guest Frank Cappelleri coming on at 5:35. Gonna talk his kind of technical analysis. It's Wednesday. We're ready to go here on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, here we are with charts brought to you by TradeStation. Born to trade, chart, analyze, customize, all in one platform. Trade smarter, move faster, and stay in control with the platform built for serious traders that are integrating AI into their trading and investing. Well, we're at the highs of the pre-market session, folks. We caught a bid. I think the Brentster said 405. Working our way up, we're hanging out at the second all-time closing high. That was 71.48, up 46 handles at 71.46 and a quarter. The buck has been kind of quiet lately. That's down a nickel. Looking at an inside day TLT, doing all right. Trying to clear 87 for good, up 49 cents. USO down 268. Don't ask me why. At 125.57. Gold and silver having a good day. Silver outshining gold. SLV up 231 to 70.80. GLD up $7.18, 435.36. And Bitcoin just building. Now putting that 75K level maybe in the rearview mirror as support, inching our way towards 80, where we haven't been since February. So I was not on with Dennis on the close yesterday, Dennis. And I know you put, a few dozen orders in there. And the mark in the SPY, how quick was that?
It goes so fast. And we actually, was funny on the STN think tank. We're like setting up for the close and setting up for after hours because we're like trading after hours there. And I'm like, there is headline risk today. So I'm like, you got to be careful, if you're floating orders, if you're, doing any type of, limits out there, any type of like after hours market making here, there's headline risk. And we knew that because obviously the market's tanked about 20 minutes, before the close on the Vance headlines that he was canceling his trip to Pakistan. And then, we bring Brentster in here because you may have, the headline here, which drove us up higher, is Trumpster, which he is sitting here. I don't know if he's sitting on his phone looking at the markets and he sees the S&Ps fall 40 points. He's like, well, I got to do something. Like the Trump put, and we were going to call this title, the show here, Zero DTE Trump puts, because there is just a Trump put here like never before. Like he's now at a point where it's not even about the markets. He was worried when the markets were going down 10%, 5%. This guy is worried about the markets going down 0.3, 0.4%. Like, so I was saying, I'm like, is he just watching the markets, like day to day, every day? And somebody in our chat said he's watching every tick. He's sitting on his phone watching every tick, and the markets go down just a little bit. I got to say something. So he didn't like, obviously, that the markets fell 40 handles on the Vance trip being canceled, and comes out right away. And here it is, right? Just after 4 o'clock close, comes out with the truth. Brentster, read it to us.
Based on the fact that the government of Iran is seriously fractured, not unexpectedly so, and upon the request of a couple officials from Pakistan, we have been asked to hold our attack on the country of Iran until such time as their leaders and representatives can come up with a unified proposal. I have therefore directed our military to continue the blockade and in all other respects remain ready and able, and will therefore extend the ceasefire until such time as their proposal is submitted. Real quick, I think a key part of this is when the timeline actually is. He pushed it out indefinitely, I would say, right?
I think so.
He said, we have been asked to hold our attack on the country of Iran until such time as their leaders and representatives can come up with a unified proposal. So, yeah, I mean, I think, he didn't say I'm extending it another 2 weeks. He said until they can come up with some kind of proposal. So he's being very conciliatory here, right?
He's done with it. Like he wants, and we've said this before, it feels like he just, wants out of the whole situation here now. And he's trying to find his way out as best he can. I know they got the blockade and they're trying to keep the Strait open. They're trying to do what they can do. But Trump wants to move on. There is absolutely no doubt that he wants to move on from this war. He wants to go to Cuba. He wants to do his next big thing here. He doesn't want to keep hanging out here. So he's trying, in every way possible to get, de-escalation here, and obviously, talking about extending the ceasefire until such time. I mean, so
Right?
this is like an indefinite, I think
That's what I'm saying. Yeah.
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 This is good news. I mean,
It's
if
good
you
news.
want, like this is good news all around. Obviously the S&Ps have rallied substantially here overnight because I think they're reading it as you're reading it, Brent Stearns. Like, this is good news. Oil rallied significantly yesterday, especially on the Vance canceling his meeting. But then you get, ceasefire talks here indefinitely, sounds like, and oil sold off on those headlines. And we have this little inverse correlation. We've been saying the market doesn't care as much about the war, and it's absolutely true. The market's focused on AI, but it still cares about oil. It doesn't want oil going up anymore. It's okay if oil just stays where it is. The market's accepted that, but it doesn't want it to go up more. And that was the problem the last couple of days we've been actually rallying, and that's probably why the S&P kind of had a weaker day yesterday. But let's give a perspective. I mean, even talk the NASDAQ. We go up for 12 straight days. We get a little small pullback here, and it's really not much. And then right back up to the highs here, NASDAQ, up 5 points here this morning, right back up, kissing the all-time highs here, Mr. Elconin.
In the blockade, I mean, ships are still getting through. I mean, I really don't know the whole status of the blockade. I mean, it does not seem to be doing it. Didn't 2 Iranian ships get through yesterday? So I don't know.
Who knows? What do you believe? Like, we don't know
what
we don't even know anything
PMP.
from both sides. From both sides,
Yeah.
we don't know what to believe here. So it's not even about like, normally you'd be like, well, we're not going to believe what Iran's saying. Well, I don't know, believe an administration. We don't know what to believe here. The media is all, all over the place on this as well. Unless you're over there and you're inside scooped here, it's really hard to know what to believe. And I think the market that's why it's becoming somewhat numb to these. Like when we were think about, we got ceasefire talks before, we're up 200 handles, So, I mean, yeah, it's a good rally, 30, 40 handles, but this was really good news. This, again, he might change his mind tomorrow too. So that's why the market's maybe numb to it. Who knows what to believe?
Let's go to Google here real quick. Google just spiked right as we were starting pre-market prep. It actually started spiking right at 8 a.m.
There's all kinds of Google releases here.
Google doing the old NVIDIA trick. A reminder that Google has their Cloud Next event that yesterday was like, they called it day 0. It officially starts today. So in tandem with that, right at 8 a.m., Google urges, I will say, other corporations to issue press releases highlighting how these other corporations are working with Google for agentic computing and AI, ranging from Oracle announcing the expansion of powerful AI capabilities on the Google Cloud database, all the way to Ulta Beauty announcing Google and Ulta will introduce Gemini-enabled shopping experiences that streamline beauty discovery. There was about 10 press releases that corporations issued related to appearing at the Google Nextcloud event, and it looks like it got Google going. Google spiked a couple dollars here on all these releases related to agentic AI.
So many. Ulta Beauty and Google introduced Gemini-enabled shopping experiences that streamline beauty discovery and purchase. Google Cloud announces partnership. I saw Accenture with AI partner, so Accenture getting a pop here. AVGO, also headlines in here with them as well. So Google, when you have these events, and we had them on their calendar, thank you, Michael Feehan, for having this on our calendar. They are press release, like, this is like where press release bonanza on some of this stuff here. So, and the algos all go crazy with them too. We know the algos get all antsy in their pantsy every time they see AI. So, I mean, there's all kinds of different releases and the potential for more releases here yet as well. So, I mean,
Totally.
if you're presenting at these conferences here, these are catalysts to kickstart your stocks, especially when we're in bull markets, especially when your market's making new all-time highs, because everybody's giddy to just be buying stocks, and AI is the buzzword again.
Google is getting a pop. It's up 562. It's over 1.5%, double what the market is. Well, the market's catching up a little bit. But if you're a Google trader, you're looking at this, you'll say, wow, we're not at yesterday's high, 337.17. So use that as a target well above the close, but that's your resistance area. Then you had two lower highs. You hit 340 on Friday. Sellers are like, I want 339 as well. They stepped down to 339.16 and then yesterday. But first target upside, Google, not with DL, 337.13.
I mean, Jay in the chat, obviously, you've been with us for like 12 years since we started the show. Jay, one of our first listeners back to like 2013, 2014, always gives us good commentary here. Don't short new highs. Just keep it simple. Because this is, when bull markets are happening and you're back to new highs, and you're breaking out. I mean, it's difficult when you have a Trump put that, and we can say, oh, maybe, it's, this is planned anyways. But I mean, a president that very much cares about a higher stock market, there's no argument there. It's hard to battle that. It's hard to battle that if you're short. So I know there's people saying none of this makes sense. We still have high oil prices. We're going into a recession. AI is going to disrupt the world. All those things may be true. But right now, they're not going to make you money here because right now the market is all bulled up. Can you tell when the market's all bulled up? Well, new highs and everything. But look at the Kramer effect here now. I want to bring up and go just, to the Kramer effect and bring up the stock Poet, P-O-E-T, because the stock is up 21% here this morning. It was also up yesterday ahead of a segment. Jim Cramer featured the stock. There was a caller like 4 or 5 days ago, called in about Poet. Kramer's like, I don't know Poet, but I'll do some homework. Came back yesterday and ran a segment on Poet Technologies here. The stock is like a meme stock. The stock is talked about through your social media, through your Twitter, through your Discords. The stock is really loved. So when it gets Kramer on there, everybody's all ramped up. So as soon as it was mentioned, the Kramer said it was going up. I saw it pop 50 cents just on the mention that Kramer was saying, I'm coming up and I'm going to talk about Poet. And then he talks about it, and he kind of didn't like it. He actually didn't really like it that much, but he said, he's like, it doesn't make any earnings, so I can't recommend it. But he basically said kind of that it had potential. That was enough. That was enough to blast the stock off. I know there was some people on social media saying, oh, the CFO had some commentary and stuff. I watched this thing trade live on Mad Money last night. The stock was doing nothing, trading 10, closed 10 a quarter. On the mention, they do that it was going to be up on Jim Cramer next. He said, I'm going to talk about this next. It popped 50 cents, and then it popped another 50 cents. This is the Cramer effect, folks. Maybe there's no CFO commentary to this morning here helping along a little bit too. But this was up $1 last night on Cramer. I think most of this is follow through Cramer effect. So when you start seeing Jim Cramer, just saying a stock and not even really like recommending it, just kind of saying that it has the potential, it's optical, it's in the right space, and you see these stocks blast off, that's when you're in a bull market. This speculation is coming back in. What are the other signs? The high short interest names, which we've been talking about. The dash for trash, which we've been talking about. All of these things are speculation. Look at CAR. It just goes up every day. Downgraded 3 days ago. The poor analyst downgraded at 498. And it went down $10 and then rallied 100 points in his face. Then rallies another 100 points yesterday. It's up again here this morning. Is it going up another 100 today? Why not? That's what it does. So, I mean, speculation running rampant here. Some people say that's a warning sign too. But trying to call the top on Carr, Avis Budget Group, is a good way to get murdered. Just ask that analyst that downgraded it 3 days ago.
Low float madness, short squeeze madness, these things, yes, they can be indications of some kind of toppiness, but they can also last for so long.
Oh, yeah.
On the news desk, we dealt with low float madness for like literally years that these people were, you know, pushing around these stocks in this way. And Dennis, I forget if in your rant right there, it wasn't really a rant, but did you mention Bitcoin? I mean, Bitcoin in the context of all of this, it's a speculative
and we were talking
instrument.
about Bitcoin. We've liked Bitcoin, you know, and I'm still hodling. I even said on the show, I believe it was this show or the STN think tank, that I'm considering adding to my Bitcoin. Well, I should have did it. I considered it, but I didn't do it. I think, you know, we're in speculative bubbles and Bitcoin's starting to ramp up here too. Speculation is running rampant here right now, and it's running rampant for two reasons. One, it got kickstarted with short squeezes. Don't kid yourselves. A lot of market money managers who are actually short. There's a lot of money managers who are underinvested just 2 weeks ago, and then, you know, we had the 12-day incredible ride. And I was like, they're all caught. They're all dead meat. You know, people are worried about losing their jobs, being underinvested, and they're buying every dip on everything. And now they're just combing the ditches, looking around. What hasn't gone yet? You know, what can I buy? You know, what technology's company, you know, looks good? That speculative thing, yeah, I'll go get in that, because you know what? They're trying to save themselves. Because if you're sitting in money manager land and you're sitting with too much cash and you're underperforming your peers and you're underperforming the S&P, that's how you lose your job. So there is money managers that are just in trouble here, and they are scrambling for stocks. And you think that game is over? You think they're all of a sudden got whole here? No, they're still sitting hoping for dips here, and that's why the dips are so shallow. That's why we can't seem to get, you know, any type of traction on the bearish side here, because those money managers are underinvested. Hell, most people are underinvested in this market. It's been a hated rally. So I think you've just got to be looking and like finding the same thing. And that's what we're doing in the think tank. You know, if you want to come and join us there, you know, come on in and check it out, because we're looking for stocks that haven't gone yet as well. If you've got ideas, bring them to us.
Oh yeah, just going to the whole shorting thing. I mean, I you know, looking at our audience and just the average investor. I mean, they don't short. I mean, there's few. I bet you there's less than 5% of the people in our chat, or 10%.
But there are a lot of people that do. And what drives markets, you know, overall, especially intraday, which we've talked about before, is big money. So overnight sessions driven by retail, pre-market after hours primarily driven by retail. But when you start getting into the regular session, that's why these violent moves happen at 9:30. They're like, what just happened on HPQ yesterday? It was a good example. Trading, all pre-market, nothing going on. Then bang, it just blasts off at 9:30 and doesn't look back. No dips. Bring up the chart, Joel, and just look at this thing. I'll put it on the screen here, because this move here is crazy. This is HPQ. Who gives a crap about HPQ? Well, you know what? It's a stock that hasn't gone up yet. Laggard Central, 5.63% dividend. You could argue, hey, we're a hardware company here. All of a sudden, blast off Central. You know, Dell's been going up, and obviously Dell's with the data centers and got a lot of better business than HPQ, but money managers are scrambling and looking. So the stock has nothing going on. Not all of a sudden news came out at 9:30. The market opened, and there's some money manager that says, I got to buy something. Okay, well, this is bunched up against 20 here.
Yeah, that was nice.
Let's buy this thing and get this going. And, you know, they're coming in and buying it, and then bang, it just goes up. And now that's kickstarted there too. So this is literally a laggard market, laggard technology that is driving everything right now. Like drug stocks, not doing great. Staples, obviously, who wants staples in a bull market here? So they've come off significantly as well. But I mean, you look and you want to be looking for the technology names. Poet 3 days ago hadn't even moved. Bang! You know, there goes the stock from 7 to 12, up 75% in 3 days. Wow, big moves.
Okay, let's get to buybacks, right? There's times when you buy back stocks when stocks are at all-time highs, and then there's times where, man, our company is really good value. And Adobe initiating a buyback. What Adobe did in their investor relations room is said, we got to get through 254.5. That has been a quad top. Maybe we'll do a buyback. Tongue in cheek there, but Brent, tell us about the buyback.
You're hitting it on the head, though, Joel. Like, imagine how pissed Adobe management is I mean, the stock's higher right now. They announced a $25 billion buyback plan. This is a very large buyback plan. There's not much more to the press release, but there is a nice little quote here from the company's CFO. Our new $25 billion buyback plan is a direct expression of the confidence in our robust cash flow and the long-term value we are delivering to investors, returning meaningful capital to shareholders while continuing to invest aggressively in innovation, speaks to the durability of the company's business model and the strategy to leverage AI, yada, yada, yada. Adobe shares get a nice little pop on this, and then Dennis and I are watching it after hours, and I'm looking, and I'm like, Dennis, it gave back all the gains. Adobe gave back all the gains. It is higher here, like I said. Now it is trading up a couple percent or so, 3%. But when you have a reaction like this, what do you make of it, Triple D?
Well, I mean, at 4 o'clock, you can look at it there. That high, Joe, which you can barely see up there because it was up there so fast, just at 4 o'clock. But if you dive in there, it did spike, like violent spike, like up $10 and 10 cents.
59.21. 59.21.
59.21 from 247. It spiked $12 in 12 milliseconds because that's what the algos do, and then right back down. So, I mean, you can make a couple things out of this. One, the buyback's huge. They're pissed off. The company's mad. They see their stock price and they're saying, no, they weren't wrong. We're not getting disrupted here. We're going to figure this out. We're working on probably our own AI tools because everybody's working on AI tools right now. And, they're like thinking that they're good. So that's why they're doing the big buyback. The market is still on Adobe. It is the most hated software stocks of them all. Why? Because it's still sitting down here near the lows. It does the buyback. Had good news the other day where they had an upgrade or something like that. I can't even remember. And it didn't hold up. And now you get a $25 billion buyback, which is enormous in the context of Adobe's market cap. And the stock can barely be up here as well again. So, I mean, it's not great news. Does the market eventually laggard effect? Rising tide lifts all ships here. I think there's a possibility of that. So I don't think I want to be short it here either. I just don't want to be short anything when the markets are making new highs here. But I mean, IGB's come back a long ways. Microsoft's come back a long ways. Oracle's been in ramp mode here. Adobe's being left in the dust here again. So they need something to kickstart the stock. Does this do it today? It better do it today. Like if this turns around and gives it all back, then Adobe's got serious problems. So what you want to see if you're like laggarding it up on Adobe here, you needed to catch a bid from the institutional money off the open. We just got done saying how retail drives price after hours, overnight session, pre-market. So institutional money manager hasn't voted on this yet. They're not sitting there. Don't kid yourself. Your institutional money manager that's making, millions of dollars a year isn't sitting there at 4:30 and trading after hours. They're home with their family, doing their things. They're coming back to their desks this morning. And at 9:30, they're going to vote. So if Adobe doesn't get a lift at 9:30 when the real money comes in, then it's got problems. Let's see what happens when 9:30 opens. If Adobe can get a lift off of this, that's good news. If it leaks this away today, the stock's in real trouble. Today is a critical day for Adobe.
I don't mind the setup here. You had multiple highs, 3 out of the last 4 sessions here, right at this area. So you're really not even going on a gap fill here. Maybe if you want to look right instead of left here. How many times do you see stocks open right near the top of their previous day's range, catch a bid and then continue higher? So that's what you have the opportunity here. Top of yesterday's range, 54.75. I think if the momentum can, carry off this, that you can build a sustainable bid here at this area, why not fill the gap? I mean, there's nothing. I mean, I don't care about that high. But look at this 269. You had a triple bottom at the 269 area, and then I don't know if it was a downgrade or a bad market day or whatever, but expectations here, it'd hold this 254, 255 level. Let's just float up and fill that gap. And this also, you got the 50-day moving average in there as well.
I just had to pull your chart down for a sec, Joel, because I wanted to get ready for our next news item here, which I am putting on screen right now. A Reuters exclusive. Meta will start capturing employee mouse movements and keystrokes for AI training data. What do you guys make of this little ditty here? Thoughts?
Well, I think Meta just is saying a lot of things right now. Meta has come back so fiercely. Like no stock has come back harder really of the Mag 7 than Meta in the last 2 weeks. Went from the gutter. And you know what? I have egg on my face on this one too, because I sold my Meta down at $600. 604 was when I got rid of the rest of it. And I kind of thought the downtrend would hold, and I just didn't want to be a part of it anymore. And I look at it now and think, because I was thinking, long term, I think there's going to be competition coming from everywhere from that. I still think I'm going to be right long term, but short term, it doesn't care about the long term. And I think I'm too early on that trade. And right now, the market's thinking about AI efficiency. And you know what, Meta, look what's happened to Block. It's the best example here. XYZ continues to go higher here, continues to ramp up here. Why? Because they fired a bunch of people. This market is applauding, just that shrewdness, that shrewd businessman, that we can make more money, getting rid of people and bringing in AI. Who's more shrewd than Zuck?
There you go.
So the AI efficiency trade is probably going to be here. And when we've had rumors that he's going to fire 10% of the workforce, he fires 10, 20, 30% of the workforce, the company's going to make more money. Long term, is that good for the country? No. Zuck don't give a crap. So the market don't give a crap. Market's ruthless. So, I mean, AI efficiency could actually bring Meta to all-time highs, which, I'm not saying I'm getting involved here, because I think there's going to be more competition coming from everywhere from Meta. But right now, you can't argue with price. And it's okay to be wrong. It's not okay to stay wrong. So I'll say I was wrong on Meta.
I mean, just imagine, working at Meta, that the system is installed. I assume you have to guess that it's for tracking what you're doing so that AI or a robot could do it at some point. I think that there's a chance Meta could be like one of the AI efficiency trades. Like you said, Zuck is ruthless. Zuck, a couple weeks ago, we were talking about this thing where there was a Zuck hologram that could go around the Meta offices and like interact with employees and stuff. I mean, if Zuck can save cost and cut expenses and still be generating, sales, he'll do it. Yeah. What if just crazy? What if there is like a few hundred people running Meta one day? I mean, just think about the cost efficiencies. Is that a crazy thing to say?
Maybe if it was only a few thousand, you could say it. Like I think there's a case for all of these companies. And again, it's whether it's software, whether it's hardware, whether it's technology, whether it's a lot of cases, it's just a strong case that there's going to be a lot of AI replacing human jobs. And we know we've made the case, and Kramer's made the case, AI is going to create more jobs than it's going to cost. I just think that's ludicrous. I think from what we're seeing, I don't think. I think in the short run, jobs are not a problem for this market here. I think in the short run, hell, we're hiring. We're using AI and we're hiring too. So, I mean, there is something happening there. But I think long run, AI is just going to replace a lot of jobs. So, I mean, and Facebook, it looks like fairly simple. Like, it's just efficiency. Like, I mean, do you need that many software engineers when you have, Claude just, running rampant in there? I mean, I think you're right. I think, Zuck and is set up well to like make a lot more money off his margins. Now, again, if competition comes from other products, then that's a different story. But I think you're right. I think the margins are going to go up at Meta.
Oh, I mean, this is, you're going to be sitting at your desk, and Zuck's going to come, and he's going to say, come here. Come here.
The Zuck hologram, you mean?
Say, do you know you moved your mouse only 846 times yesterday? Do you know what the robot next to you did? The robot next to you did 1,428. Grab your backpack and hop on your scooter and get out of here.
This is an excuse to fire people.
That's all it is.
You and Brent just said this is an excuse we're setting up to fire people. They're setting up with this headline to fire people and have an excuse to fire them. They need an excuse to fire people because hell, there's going to be a lot of people that are going to get fired. So from AI. So and this is a good excuse to do it. That's what it's setting up to do.
And I'm sorry for laughing there. I wasn't laughing at the situation. Obviously, that's a dire situation.
Iran attacks a ship in Hormuz happened just right now.
Oh, that's fake news.
That's Wall Street Journal reporting that Iran just attacked a ship in the Strait of Hormuz. And that's why we just dipped down 5.
About
points.
About 8 points.
That's what we get now. The Bears, you guys get 5 points. And Trump will come out tomorrow and say, we're extending the ceasefire not past eternity now. And the market will get to infinity and beyond with the ceasefire, and the markets will rally another 50 handles. So that's
crude oil went up about 50 or 60 cents per barrel. We are over 50 per barrel now. Just a little note there.
Okay, I love having new guests on the show, and I love it even more when the new guests show up early. So we are going to bring to the stage Frank Cappelleri, founder and president, CappThesis LLC. Good morning, Frank. Thanks for joining us here on Pre-Market Prep. Independent research firm that helps active investors through time-tested chart and statistical analysis. How you doing, Frank?
Hey, Joel, thanks a lot for having me. A pleasure to be here.
Wow. Well, first off, I mean, these markets, time-tested charting and statistical analysis, constantly changing markets, constantly changing environment, AI, like, how do you adapt? How do you adapt to these changes so quickly?
Well, I think just like everyone else, you have to use those tools to stay in front of things. And I think initially it's a little bit overwhelming when you hear all of this coming at us so quickly over the last 2 years, but I'm sure we can all appreciate that it makes our jobs easier. You know, as someone who runs their own firm, you know, I do all the content, but you know, I've utilized these tools to help everything more efficiently. And I think what you guys are just talking about is a real thing. People will get fired, but you know, if you talk to a number of corporations or even small businesses, you know, not necessarily looking for, you know, the tools to do this. They're looking for someone who knows how to use those tools. So for people that are, you know, this is kind of going off market, but for people who are freaking out about that, it's just this is a real big opportunity to grasp on to those skills and show that you're proficient at it. Right? Especially the people that are a little older. I put myself in that category. You're looking for someone to help you with that because things are changing all the time.
So, Frank, we talk about technical analysis. We talk about moves in the markets. But one thing we don't focus a lot on is the breadth in the market, which is critical. And we had a point where we had these big stocks leading us. Like, what about the small caps? What about the small caps? What about these other stocks? And you've had a little bit of turn, right? Some of the mega caps have fallen off. But what are we seeing now? Are we in one of those periods where, you know, the leadership is going to narrow again and it's just going to be those big stocks carrying us up? Or have we got to the point where the little guys are going to continue to do a lot of lifting?
Well, I think we could have both now as well. But, you know, at the beginning of this year, really going back to October of last year, that's when the large cap growth and mega cap really peaked. Remember, there was the one day when 3 Mag 7 stocks reported on the same day, all gapped up, and that was really the top. And you know, in terms of breadth, the market actually did very well in spite of that up until the middle of or end of January, with basically everything else, the field, doing what it needed to do. We had like extreme breadth without technology. Of course, things started to fall off. Momentum started to swing a bit as the overseas tension came back, and when you had eventually lost the financials. So on the flip side now, right, the reason why, you know, the XLK is up, say, 16 straight days is just a huge catch-up move. Now we know it's all headline driven, but it shows just how much those areas underperformed up until now reporting earnings again. So in the meantime, you know, over the last few months, as you point out, you know, small caps are doing better, big caps as well. So I think we're at a point now where I'm always looking for bullish patterns, right? To grasp on the tight consolidation formations to buy breakouts into. So I would say that the drawback of this type of environment is that most of these names are straight up. So it's difficult to actually, you know, identify a low risk entry point, because we know at some point that rubber band that was really extended to the downside is even more extended to the upside now.
Yeah.
So what I'm looking for is, you know, the next profit taking session takes us to. So the best part about this whole thing is that you look at this bigger picture, we can identify potentially some key higher lows that can form even bigger bullish patterns that we could take advantage of through the end of the year.
Frank, so again, going back to, what you were talking about, and you're making a good point here that, we kind of were in this value market from like November, December, January, February, kind of started way before the war trade, and tech was kind of out of favor. Like we were talking about the underperformance, everybody's talking about, look at NVIDIA. It's been going nowhere for 6 months, for 8 months here, 10 months, just kind of sitting here stuck in the mud, and other stocks were picking it up. Drug stocks got hot in January, even back to December, and staples were moving higher, and now they've kind of rolled over here too. Do you think the rotation comes back into those names because tech is so fully extended, or is like tech was just underweight for a little bit there and now money managers continue to scramble? What are your thoughts, on rotation back into some of the stocks that are lagging now? I mean, drugs have been going straight down here for the last month.
Yeah, right. I think, short term, we have to expect some sort of pullback, right? I don't know what that's going to look like, but now you have no real support near term for, again, we can talk about XLK or any of those big stocks that look like that, right? But again, I think it's the more interesting part of what it comes after that. But we're going to look at this market as, a market that is now making new highs after, a corrective phase. We've seen what happened before. We just saw last April. Go back before that, we saw it at the end of 2022, 23, COVID, so forth and so on, where you have a big pullback. It's obviously predicated with a lot of huge moves both up and down. And so as we've seen now, typically that ends with a cluster of huge buying, and eventually that can then lead to a more consistent, trustworthy uptrend where we get back to traditional type, bullish formations and setups to take advantage of. So I think if that environment, we have to have growth as part of that picture. And I think if you see the beginning stages of a lot of these moves, it is those names. It's the ones that are high beta, high liquid, identifiable. And then again, from that point, we'll see how the rest of the market can catch up to it.
Frank, doing technical analysis, sometimes can be easier than others. And I just want to talk about some key technical levels. Let's just use the S&P 500 cash if you want, or the futures. When it gets like this, there's really not much resistance that you can find, right? I like to, the only high is the all-time high, and it was backed up a few days ago. Came within a couple points. I also like to mark, the all-time closing high, right? The mark where people, that's the best sheet, the best mark on their statements. So in this kind of market, like, give us some resistance. How do you find resistance? And do you have a point here where maybe on the downside here, you would look to say, hey, maybe this little party's coming to an end?
It's a great point. And I think we're really in price discovery. We can even put it to say resistance and support discovery. So a lot of times, for instance, as a market's going down, I'm always looking for some sort of trend reversal, right? And so, but as we saw, those don't matter either. So, and it's interesting, you usually get many more questions about levels when they really don't matter, when things are moving so quickly, right? Thus, when things get established. So from right now, Joel, I think you bring up a good point. Like, where is the resistance? Well, it's wherever the market stops going up. So we just had, the last high 2 days ago. Maybe that changes now. And at one point, that's going to be the spot we can start measuring everything from. Retracement levels, where, a pullback, say, to 7,000 or below, it takes us. That can maybe be the beginning stages of a cup and handle pattern. Or those are the things I'm looking for. Trying to, understand where that's going to occur at. When, again, going back to the XLK example, through every resistance line we can imagine, right? Every retracement, every moving average, extending way higher. So it's not worth trying to guess where that happens. Just, this type of market, you're either in that trade, you're hopefully using a trailing stop, or waiting for opportunity. So I think most people are waiting for an opportunity, and we'll see again when that pullback comes, where buyers step in, but more importantly, what shape that takes from a technical analysis perspective going forward.
Frank, the question is, do we get the pullback? Because, I'm seeing these markets and, we dip 30 handles and the President Trump pumps the market up again yesterday here. Do you think like there's a potential here? Like, is it inevitable that we're going to get a pullback here because we're just overextended? But we've seen overextended markets before just continue to climb and climb and climb. The market loves climbing a wall of worry. This worry wall that just climbed is one of the biggest ones we've ever seen. What happens if we don't? What happens if this like, it's like, I know you were asking, it's going to be a breakout or a fake out. What happens if this breakout's real?
I think it is real. It's just a matter of what shape does it take going forward. But I think the interesting part is that, coming into April, things were still low. And, the positive take on that was that the setups were conducive to having some of these big names report earnings and be able to react positively to them, right? So now talking about 15, 20% move in the opposite direction, even before the biggest names even start to report earnings. So I think it's going to be interesting to see if we do get a lot of what looks like good news. Does the market reward it as that, or is this really priced in at this point? So I think that we're going to get a little bit more understanding of how, again, good news is treated, because as you guys know, when good news is treated poorly, that could tell us that the momentum is then shifted back to negative.
Frank, I want to talk to you about momentum here. And, there's stocks have momentum. They have momentum to the upside, they have momentum to the downside, and then everyone has their own, definition of a trend, right? In momentum. So I just pulled up Microsoft here. I don't know if we can, we could talk. I mean, if you're looking at a monthly chart there, I mean, that's an upward momentum, right? That's an upward trend. Like how can you argue that that's anything but an upward trend, right? It had a lot of downward momentum, right? Coming down from when it peaked in July. How, the turn? That's what we talk about in the markets. One thing Dennis is really good at identifying. It's like turns in the market. From your technical indicators in time frames, when do you say, okay, this downward momentum in this long-term bullish stock has turned? What are the tricks to your trade?
Right. Great question. Well, this looks obviously much like the IGV software ETF. And that's a good point because, as that was rolling over and everyone started noticing it and want to buy into that, the momentum has continued to move lower. And so from a, tactical standpoint, it's very difficult to step in front of a train like that, especially with names like Microsoft driving it. But if you were to draw that all the way back, just like Microsoft, one of the things we noticed was that it was, the biggest down month since October 2008, right? Great financial crisis, low or right around there. But at the same time, it was coming down to a resistance or a support level that it broke out of, a breakout zone from a few years back. And if you were to draw a line over the last 20 years up, it intersected that as well. So that pullback, which looked very severe, was just back to look like a really interesting buying opportunity based on the long term. So if you're looking at long-term areas like that, I think the best thing you can do is identify a spot where you have a confluence of support, maybe it coincides with a retracement as well, and then buy that, right? And that's what I think when we have big volatility events like we just had, long-term investors should look for that. Now, in terms of, when to know that's working, obviously we'll see what the bounce comes and if there's any upside follow through. I always look at, things changing during phases. So again, come back, either hold support or establish support. Next step, follow through. And next, the third step I think is the most important. You have a higher low, because a higher low is always the building block we need for a bullish pattern to then form. And then obviously momentum can take over from that point.
And so you're using longer term charts there, Frank. I mean, intraday trades, but in order, I'm using a monthly here with you using longer term charts. Also, another thing that we don't talk a lot about is relative strength, and I know that use that as an indicator. How do you intertwine the two, the price action, relative strength?
Yeah, I think that that's very important, especially depending on what you're comparing to. Obviously, a very important one people talk about a lot is XLY, consumer discretionary, versus XLP, consumer staples, right? That gives you a very good indication of risk on versus risk off. That obviously turned. One that I was looking at recently, though, was actually XLK technology versus XLE energy, right? It's not very often that you see the energy take the lead like that for an extended period of time while XLK is rolling over as well. So that ratio got extremely depressed to the point where it was at levels that we saw at last April. So again, the situation is different, but the big picture is not, where it's very rare and you see both of those rising together. If energy is going up at a good clip, like we saw, there's something making that happen, and it's probably a risk-off event, and you're probably seeing that resulting in money coming out of technology. And so again, every situation is different, but that looked like a temporary phenomenon, from my perspective. And so started to show that to our clients, is saying that at this point, at some point, regardless of the news, price action like this probably can't continue to be this extreme. And so given the fact that technology underperformed for nearly 6 months, it just seemed like an interesting one to look at. And so when we see that happen, maybe that very short term is getting a little bit extended now. So, we'll see it. And this is why I think we have to always look at the absolute and a relative together.
Okay, Frank, before we let you go, we got to get a stock pick from you. You got to get something that you like here. What are you eyeing up? What do you look on the charts here? Is there any company that just stands out to you right now and say, hey, look, this one hasn't gone yet. Maybe this is, a sector, or even a sector, if you don't want to go into stocks too, Frank. We'll leave it up to you here, but what do you like?
Yeah, we give a lot of chart trade ideas to our clients, but big picture, there are a lot of software names that look good now because of what we just talked about, that are trying to break out from bases. And I would put in, you guys are talking about Bitcoin before as well, and Ethereum, same thing. So what we try to identify at CappThesis are just structural bases like that when you're in a market like this, and also mean reverting moves sometimes. But for the structural bases, can't really talk about that from the names that have really taken off so far. So the ones that maybe could play catch up that have been out of favor. And if you look at those charts from Bitcoin, Ethereum, IGV, and you put them next to each other, they look pretty much the same. So I think both of those could be areas where rotation is just getting started, and you can identify how there's bullish patterns there, how there's breakouts to the upside as well. So we'll look at those three.
All right, we've been on the line with Frank Cappelleri, founder and president, CappThesis LLC. A good follow on Twitter at Frank Cappelleri, and can go to his site here, CappThesis.com. Frank, first time, great time. We got to have you back again soon. Thanks for joining us here on Pre-Market Prep.
Thanks very much, guys. Looking forward to the next time.
Thanks, Frank.
Okay, that was fun. Different
Chat loves Frank.
Chat was on fire.
Thank you, chat, for all the nice feedback on Frank. That was great.
Yep. Feedback is important. Little bit of a leak here, Dennis. Little bit of a leak.
The little ship attack that's Wall Street Journal's reporting has people a little concerned again. Ceasefire, no ceasefire. Start blowing up ships. They'll be firing again over there now. So who knows? We'll be no ceasefire probably later on today. That's how this works. I'm done with the war headlines. I don't even want to hear about the war anymore. I want to hear about the good earnings that we had from GE Vernova, because it's up 75 points here this morning. It is a $1,000 stock, but still a big move. New all-time highs. The best financial engineering company ever when they split up that company we talked about yesterday. GE Vernova continues to run.
As you said, Triple D, really solid report. They reported Q1 earnings $2.06. Analysts were under $1.90. Sales also beating pretty handily, $9.35 billion versus $9.17 billion. They raised guidance, and they raised guidance sort of substantially, about $500 million. They raised their 2026 sales guidance from a prior range 44 to 45 billion up to a new range 44.5 to 45.5 billion. Analysts are down under 44.5 billion. Shares over that 1,000 level and over the 1,050 level here this morning even.
And over 1,060 and over 1,065. I will give you your pre-market high at 1077.50. That's the only thing the market's given me. Don't know what the expected move was here, folks. So I think maybe if it's over the expected move, let's say the expected move is 50 and it pulls down and it's only up 50 points, that would be support. If it just keeps on going and it blows through the expected move and keep on going, then option guys are even more in trouble. So the only thing, 1077.50 pre-market high, that happened in the 8 o'clock bracket.
Going the other way, VRT.
Oh,
well, it was going the other way, but they can't help themselves buying the dip. I was looking at this like this morning when they reported here, and they reported pretty early.
yeah.
I was like, oh, this is not great guidance here from VRT, but Stocks buying the dip here. Give us the numbers here for VRT.
All right, quarter was good. They reported $1.17 versus $1 estimate. Sales beating at 2.65 billion. Analysts were at around 2.63 billion for Q2. They're looking for earnings $1.37 to $1.43. Analysts are up at $1.42. The sales guidance for the quarter also wasn't super good. Their fiscal guidance was fine, but I think if shares are trading lower here this morning, trading down a few percent, I think it was probably because that worse than expected Q2 guidance.
Yeah, it wasn't great Q2, and I love in the presser they put raised full year's guidance in their own presser, but I was like, is it? I'm like, I don't see a full raise guidance.
Fiscal year looks like it was raised,
they were trying.
but they were
didn't
trying.
tell you what the quarter. They didn't put that in the headline.
There you go.
When they put these pressers out here.
They're good. They're good at this.
Yeah, they're
stuff.
good. They know what to say. You know how to say it here. Joel, jump in here because they bought the dip already here on VRT. I mean, this had the blip back last year. Remember when NVIDIA was rumored to be talking about, chips that cool themselves? Because obviously it's cooling for all your chips here. And VRT got hit pretty hard on that headline. We've been just straight up ever since. Like straight up, not even looking back here. Like these chips aren't going to self-cool. We cool the chips. So dip bot here, it's the skidding bot here. Thoughts, technicals, too overextended. What do you think?
Messy part. Yeah. Yep. Yeah, did have your buy the dip opportunity. And then, wow, was this a crazy print? Did this really go up to 311?
I see, like pre-market.
Yeah. There's pressure on it. They bought the dip once. I think you see continued pressure on this today. Top or the bottom of yesterday's range. You're gonna look at that for a long time, folks. I think 310.84. That'd be your gap fill. If somehow you got a miraculous rally out of this, anything in the 310 area would be great resistance. Coming back on the downside, now I see they punched it to 293, and there's just nothing setting up. There's just not more than one low in this area. So I think you just have to pick your daily lows. This one kind of feels like, to me, a Netflix. They hit it, and they kept on hitting it. So don't know if today, I don't know if
you don't like the BRT.
Come in today and just buy the dip right away on this one. I think I'd let it shake out a little bit.
We had Boeing report. We had, a lot of other companies report. Philip Morris, AT&T. We don't have time to cover them all. I want to preview because we have Tesla earnings here tonight, and we've got to talk it because, we like to set up into the report. Let's be honest here. Do they ever beat earnings? The stock just doesn't beat earnings. It's probably going to miss again. It's just what they do. I mean, the guidance is low enough. Maybe they don't miss, but it doesn't even matter. I mean, this company's all on hope. They want to know. They're going to want an update, obviously, on Robotaxi, but more so on Optimus. Give us an update. Give us something cool. That could be the driver going forward. Does he say anything about SpaceX on the call? That would be a question as well. We had some news with SpaceX yesterday. They were buying some company, and I didn't know the company's name here. Maybe you have that, Joel, or Brentster. That Tesla was buying.
I forget. Let me see if I can find it.
I know. I'm bad. I don't remember it here now either.
It's
but
okay.
In any regard, there's a lot of questions to be answered here for Tesla tonight. But I would say, like, oh my gosh, if they miss earnings, the stock's going to get killed. It's not. It's just not the way. Like, it might dip initially, and then they just seem to buy it back anyway. So still own some of this in the long-term portfolio here. I have a love-hate with the stock.
It's had a nice rally. The market just, brought it along, right? Just like the market's going, okay, we got to take Tesla with it. We got to take Tesla with us. And that's exactly what you saw on this big day. I think you did have some news on this big day. I will say it's hard to find good. I mean, a pop up here to the recent high of the move, 409.28. I call that, decent resistance. And right now, that low at 362.50. Look at that as potential support. I think maybe this one, and once again, I'll just go to where, the expected move is on this and, use that as parameters. I mean, you still got the whole SpaceX thing and, coming out. Is he going to, it's been building up to it. So really no clear standout levels in Tesla. Someone's asking, AT&T. We haven't talked about
Raphael
it.
threw us a $5 to
A
cover
$5?
AT&T. And let's go back to the earnings because we'll cover those earnings. You got those $5 out there. We'll cover those earnings for you. Brentster's going to grab the earnings report here for us right now. Stock is trading down here. I mean, really, when you're all ramped up in a bull market, AT&T is probably not the stock you want to be in because it moves counter to the market. And that's exactly what we're seeing AT&T do again. It's also exit dividend here right now for just a few days ago, and the stock seems to lag. Sometimes for a few weeks, even a month after it goes ex-dividend, because a lot of people are in there for the divvy. How are the earnings?
Earnings were fine. They reported 57 cents. Analysts were at 55 cents. Sales beating modestly, 3.15. Analysts were at 3.13. They affirmed guidance. Like, this is the environment though. Like also in the vein of this, look at the T-Mobile rumor from yesterday that there could be some merger with T-Mobile. They gave all those gains back from a rumor. And I feel like, it's just this environment. Crappy stocks get punished. Sorry to say.
Yeah, and it's just defensive. I mean, in a market that, AT&T can turn itself around, and it does better when the market's doing bad. I mean, you can look February and March. This was one of your outperformers here. Why? Because people were hiding there. They're not hiding in this stock. This stock actually moves almost exactly opposite to the overall market. You can trade this, like the correlation here will be negative to the market.
You thought you missed the move and you wanted to get, this rally from 25 to 26.78. You got the rebound. You're pulling back. You're already well through the 50%. You did have a pair of lows at 25.5. So right now, based on this 25.30 print, I'd call that resistance. And if you want to hold out, $25 has been that was the low earlier in the month. So 25 to 25.5 potential support and resistance. The other thing for AT&T is you can wait to see how this day shakes out. And then it might give you, like 2 or 3 lows in the same area or 2 or 3 highs in the same area. And then boom, do a reversal. But right now, T in the red.
Another stock that is going to be under the microscope tonight is IBM. Big Blue reports earnings here. Obviously, the bar is kind of low. The stock's been beat up here. They're worried about, obviously, you look at consulting, you look at the businesses that IBM has, and you're like, AI disruption happening here. What do they say? I think they'll be positive. I think the commentary will be positive. I think the earnings will be fine. I would actually not be surprised if IBM breaks out through the 260 on this earnings report. So I'm kind of bullish on IBM into the print because I think some of the fears here, I don't think they're overblown. I think they're early. So I think the fears are real. I think consulting businesses are going to get disrupted by AI, but I don't expect IBM to be saying any of that stuff on the call, and it's not going to be in the earnings here yet. I think their guidance will be, like interesting to say, are they conservative on the guidance? Are they worried about any type of disruption here? And then obviously the quantum business too, which is a wild card for them. So I actually think it's bunching up here. I don't own this in the long term. I kind of sold it here because I am worried about long-term AI disruption here. But as a trade, I kind of like IBM into the quarter.
Yeah, wide open if it clears 260 here.
Yeah.
You bumped up against that a few times. Longer term on the upside, wow, it was just an ugly few days here back during the software apocalypse here as it came down. So you have 50% of this entire move falling off the November high to the February low. It takes you back to the 273 area, and that's right up there with the 50 days. So there's a look at IBM also. If you're trading it or trading the options, keep an eye on that expected move.
9 o'clock is here. We're going to wrap up the show. We're going to continue the conversation over in the STN Think Tank. If you haven't given us a trial, give us a try. We're doing a lot of fun things over there. We got new tools for you guys to work with there. We have our own news feed kicking in there now. So lots of cool things over there on the STN Think in the STN Think Tank. Yeah, final thoughts, Joel. You got some final thoughts for pre-market?
We leaky off the pre-market high. Very straight up since that 405 truth. So once again, verified error up here. Let's take it out. They'll make sure we take out that pre-market high, giving back about half of the daily range so far. So Hard to see everything that's going on to justify us being up 40 handles, but you know what? It doesn't need to be justified. Tomorrow morning, everyone tune in at 8:35. Miss Schneider's going to come on, and she is going to introduce, well, I'm going to introduce another person on the Modern Family. That will be Sister Semi. And folks, this is a good one. Thanks for joining us on PreMarket Pro.